what has been the relationship between banks' lending rates and market yields. We just now established using data that the repo rate to weighted average lending rate transmission is roughly around a quarter now. This was from 3 to 4 quarters seen during earlier RBI cycles. Now, is there a relationship of the lending rate with market yields? Again, we go back to data and we use a 12-month change of the weighted average lending rate, but this time on fresh loans and map them against India 10-year yields. The relationship that followed came as quite a surprise to us. We noticed that the relationship for nearly 1 decade plus, the weighted average lending rate for fresh loans seems to lag the 10-year yields by around 9 months, with a much tighter relationship post 2020. Now, what does this all mean? In effect, this tells us that any pressures experienced by the 10-year yield in India would trickle down into bank lending rates in around 9 months. Let us now examine the whole list of market yields and rank them based on descending order of repo rate transmission during the previous RBI rate cut cycles. Now, before reading into the RBI repo transmission into market yields in this chart, remember that the February 19 to May 2020 repo rate cuts, especially post-COVID, was dominated by excess liquidity. So this cycle apart, as you can see in this chart, the weighted average call rates and the AAA PSU yields appear to have consistently transmitted more than 80% of the repo rate cuts during the RBI rate cut cycles. Now, one drawback to examining market yields during rate cycles alone is the dynamic nature of debt markets, where they generally tend to look well ahead of macro trends.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.